What did you think about what Jay Powell had to say yesterday? What do you think about the market's reaction? At least in the pre-market, we've seen futures go from mixed to solidly higher.
I think the few good comments that Chairman Powell was actually able to get from some of the silly questions the Congress people were asking is that, Chairman Powell clearly said we don't have to be at 2% before we cut rates. We just need to be in that glide path. That wasn't his exact words. And so I think that gave a lot of confidence to the market that we're not going to have to wait till 2%. But if we continue to have this type of data, we're going to get rate cuts. Because what you don't want to do is the Fed, which historically is late to cut rates because they wait till something happens, you want to get rate cuts earlier before you have, for example, another New York NYCB bank, happening in the market.
Okay. It sounds like that you believe that since the rate cuts are coming, that's given the market confidence, and that we've heard a lot of people on CNBC say all that matters is that the cuts are coming. The timing of the cuts, is that meaningful to you at all?
I think when we look back in 2025, looking at 2024, you won't remember when the rate cuts were, but I think right now in the moment, they definitely matter. If all of a sudden rate cuts, because we get, let's say, more inflationary numbers, don't come until more the back half of the year, then I think that will cause more volatility in the market in that time period. I don't think they're going to cut rates right before the election, so I think we're going to get them in the summer and then possibly right after the election because I believe they meet on November 4th.
All right, so you're also looking at some of the technicals when it comes to the market. According to your data, about 80% of S&P 500 names are above their 200-day moving average. The index itself well above the 200-day moving average as well. What does that mean to you?
So we've been getting these one-day scares this year where we get the market sell off for one day like we did earlier this week. But so historically, when you have 80% of S&P stocks are above their 200-day moving average, that tells you that's not historically a great entry point because typically it's telling you the market is very overbought. So I think what typically happens is you work that down where you get more into the 40 or 50%. But like we're seeing today, the market's looking past that. And we seem to have liftoff in the market because I think of, to your point early on, Intel, more government spending, stimulus for semiconductors, as well as I think Jay Powell's dovish comments yesterday.
All right, so you're also making some plays right now. You're investing in AI, but it's not one of those Mag 7 names. You're investing in Palantir that saw a big pop yesterday on getting a new Army contract.
Right. So Palantir, if you go back and listen to their earnings report that came out in February, really what's exciting about the name is the government contracts we've known about. That is where they dominate. It's really the growth in commercial. And so their growth in commercial in Q4, their revenues were up 34%. And they've been doing these AI boot camps where companies can come in, basically spend 10 or 12 hours with them, and they will go and look at their information, and then they're able to convert that they're able to monetize those, where companies are coming in spending $1, $2, and $3 million to start working with Palantir. And this is just, when you listen to Alex Karp, Alex is like, we have to change the company. We have to rebuild the company because of this commercial lift. And so I think it's early days, and I think Palantir is going to end up being, it's already a very important military software company, but a very, very important corporate software company for investors.